Hello and welcome, as it is the 21st day of February 2018. I want to talk about stop losses. I want to talk about my strategy in this particular video. I do not use stop losses. I do not recommend using them, and I certainly, if I were to recommend you using them, I'm not going to explain you how to use them. For it seems every single trader that writes a book on technical analysis will write a lot about your stop losses. All of the people making videos on the internet, especially for years upon years where it was stocks and gold and silver and, well, the non-cryptos, as it's a new trading mechanism, talk about stop loss here, place your stop there. Okay. It's a measure of risk reward. However, I'm going to say right now that I will never teach you how to do stop losses, for if I teach you, I would teach you not to do them. And I think more so in this space. But again, there's all these great professional traders and Forex and stock traders that talk about stop here, stop there, and they win. They win well. Brian Shannon from alphatrends.net, my idol as far as doing content, talking about technical analysis, whom I learned from, and basically the person and the reason why I'm doing the videos in these kinds of formats. Of course, using my style. One of the things he said is, this back then, he doesn't say this anymore, is to make my ideas your own, which is what I did. So within my videos, that's what I really would like for people to do, is to make my ideas their own. But in the time frame when I was learning at the end of the last decade into the this decade, I tried to figure out how to use the stop loss game, but it just never worked. And it's just a double whammy. Oh, put a stop loss at, say, 355, and then you notice you get out at 351, and you can get crushed on a stop loss too. Where if the thing just goes way, way down, and I think in this video, which I have not completed, it's inspiring to make me talk about stop losses. I've watched the first 2 minutes saying never use stop losses in crypto unless you just made good profit. If I make rules for myself, yes, never use stop losses, period. And there really isn't too many unlesses, unless I can figure out a good reason why there'd be an unless, and I can't figure that out. But you can see in this market here how it just goes down like that, and well, there could be a situation where maybe you're stopping it down here and you sell down here. It's if someone decides to say in a market like, especially the lower volume and the rich people type deal, if they just say, okay, I got 50 Bitcoin worth of whatever, or I just got so many that's a large amount, and let's just dump it on the market, whether it be by accident or by force, that's going to make all those things go down. Now, generally speaking, the opposite happens probably 9 times over 10 in the crypto space, which is why I talk about sell orders. But if you can make the stop loss game work for you, well, by all means, do what it does that works for you, because I sure as heck am doing what works for me. With XCP Counterparty, I bought this yesterday, and I bought it at the line, or a hair above that line, 2401.025. I got this in at, if I take a look at this on, say, we'll say 45-minute time frame, last night at 7 p.m. And I just found this out like recently, like just now. As I'm just going through this chart, I'm like, oh, it's right at the line. Did I have an order in there? I don't remember buying it. And I mean, I should be buying now. And then I check, yep, my buy order hit. Okay. I can't remember how I calculated it, but I'm sure there was a good chance Fibonacci was used. I'm sure if 24 was a key number, that it was a Pierce extra below. It could have been a key level from which it came from. Actually, it came from here. I might have just accidentally put in a spot that might have had a good spot where I thought would be a bottom, because it also came down below the slope. See, I'm using these trading mechanisms. These are the ideas that I have made my own. When I make a trade like this, I need to put sell orders in and consider where I buy next, because I'm not doing any of the stop loss game, because I see on the long term time frame And here's a spot here. How's your stops doing in this point here? Markets go down, mainly buying here. And to think, if you started this, say, yeah, right in here, this, let's just say you started this way back when it was beginning, in the summer of 2015. You got on this down move, you bought, you sold, you're looking good, you're buying back. Okay, now I got a decent amount, and yet it goes all the way down here. Your portfolio would have been destroyed as far as what it was worth. However, you have amazed a large inventory of XCP as it was hitting this bottom, because during the down moves from the summer of 2015 through the end of the year, it was only buying. But then in 2016, starting in January, the market rallies up into February and you sell some, buy a bit of it back, and then you just are gloriously satisfied when March of 2016 comes and sell order, sell order, sell order, sell order. So as horrible as your portfolio would have been down here in January of 2016, and as glorious as it was in March of 2016, I realize it's like a chess game. It's like more like a Magic the Gathering and Risk, the board game, if you understand that, where you have a turn, and when you are done, you pass on your turn. Because in games like Risk, you can do just one play and pass the dice. You can do a whole bunch of different things and then pass the dice. And I look at this game the same way. The Bears have a turn, they pass the dice, then the Bulls have a turn. There's only one way you go. It's up or down type thing. Well, it's up for the Bulls, down for the Bears. So I realize if it's just going to keep doing this kind of thing, I'm going to look to be buying lower and selling high, as I've explained in this video, because that's just easy for me and I deem it as profitable. I have seen the profits come in as doing such within my bankroll. And that's how it is played. And mathematics, the number is just so simple that if I was to talk to my 12-year-old self about this, I would be dominating this game. Totally. Easily at 14. Oh, not even maybe easy. Yeah, not even maybe easy at 12. It would be so easy. Because, oh, you buy at 240. If you sell up here, then you're going to get profit. And if you sell it down there, you're going to hit a loss. Okay. If you're just going to play stop losses, I just recommend myself bet on sports all the time. And I still do that, but that's fun. However, that's the other side part of the game. I bought in at 240125. That's where I put my buy order in. Right at this bottom. Now it could pierce below it, and that's like look great now. And then you're like, oh, you should have bought at 20. It went down another 20% more. Okay, if it does, it does. But if it goes down to 20 and that's its bottom, then it's going to go back higher and I'm still going to win. Because when I make a buy like this, I say to myself, okay, what's next on the agenda? Because before I put a buy order here, again, probably because of mathematical Fibonacci and or where it came from, decent sized leg lower from here, could have been Fibonacci downside from this low to this high. And you know what? Let's take a look at it. That's probably what it might have been. We have a 30 bottom and we have a 41 top. Let me just move this down. Downside target is 247. Pierce extra down to 240. That's exactly what I did. Okay. So then, now I have to decide, where do I sell, where do I buy next? Well, the answer for where you buy next, at first is simple. Just a decent number below. This is why if you're talking about simple mathematics, you don't even need to look at charts. All you see is your order book buy 24 handle or the 240 handle, and then you just maybe put 160 in and you're done. Didn't look at the charts, didn't matter, but you understood the mathematics. You understood the difference on 160 and 240 is 80. You're looking at a 33% price direction on the lower end. Those things are still technical analysis. You can do technical analysis without even looking at the chart, because that means you are being technical with the situation on subject, and you're analyzing it. That's what technical analysis means. So all I know is that it's time to buy lower. I'm not going to put a buy order in now. I'm going to wait. I'll move this line. Well, I'm going to keep it there for now, because then if it goes down below here, I'll calculate where I'd want to buy. Probably around the 170-ish area to 180. 61.8% Fibonacci. You have a 115 handle and a 755 handle. Key numbers 368, 236. See, when I say that, I always say that in my head after I'm done this. I say that in my head. I look at 236, 368, because that's what I know I'm looking to tend to look for. And within such, it's already hitting the 236 number now. This isn't right. Okay, this is 001, 0075. Oh, that's right, yeah. So 230, yeah, 236 is the key number. So below that, we'd be looking at 179. And then, yeah, you pierce it down to about 170. So that's where I buy next. That doesn't look like a 61.8% correction. That looks more like a 54%. I don't know. But you know what? That's still a buy spot. When I buy well below the 18 average of lows, which is usually always the way it is, then I will be looking to have a sell order if it can have an immediate move up to the 18 average of highs, which would be at around, in this case, 335. It's a 10-point difference on 24, so you're looking at about a 40% return, and that's not bad. Now, generally speaking, what I'd want to do, say if I bought 100 here, and I bought a lot less than that, but if I bought 100 of one particular item, I would sell about 23 or so here. And then if it keeps going up, I would sell about 21 on the next one. Then I'd sell about 19 on the next one. And I probably put myself in line to do 6 sell orders in a row. But how I would order my book is I would put a sell order for 23 near the 18 average of highs. And then I would just put a large sell order for the remainder somewhere, just in case a big move happens. So where would that move be? Well, 2-time hit recently here. Big level of resistance there. Number on this would be about a 640, so that would be about a 3x move. So put it all there, the remainder of it. And in the situation that I get a sell order hit, market rallies up, comes to the 345 handle, I sell 23%-ish of what I bought, then what I do at this stage is I remove this sell order. I will then most likely put a buy order. I probably put in the exact same spot I did before. So if I bought 100, sold 23, I would most likely be looking to buy back, I would guess, about 30 to 32 of them back. And I would then put a sell order in for about 21. I see I sold at 35. I'd probably look for about, in around 52, I'd put a sell order here for, again, around 21. And at this stage, I would probably put the remaining sell order somewhere around here, or even, well, probably up in here at the 1 handle for the remainder. That's the type of strategy that I am playing within codes like this, XCP. Other things that I bought today, there's a couple of them. Let me just see if I can find it. IOC I bought today, and I already had this, so I bought more of it. There we have it. So, breaks down below the support, and How big of a leg difference is it from here to here? No, it's decent for me, decent enough. And an easy way of deciding how much I buy is tremendously easy. For, as I mentioned in the counterparty, well, what's my last sell order? Let's assume I'm selling 20 of an item, say, way up here. It didn't go through. Well, if I want to put another sell order below that, I'm going to want to sell more, like 24. So I'm going to need to buy at least that. But I want to buy more than I'm going to sell. Because if I'm going to place a sell order for what I intend to buy, to sell 24 units, then I'm going to want to buy maybe 28, 29, 30, and use the additional amount for selling on the higher prices. Because my general rule of trade is sell 100, maybe buy back 130. Then I buy the 130, I'll sell about 110. Something like that. So always buying a little bit more so that when glorious days of big price moves come where you want to liquidate out, well, that's another decision in the game, how much you want to exit out of your portfolio for great profits. See, in the JSNIP Forge video about never use stop losses in crypto, I think I already talked about this at the outcome of this video, but this is triggering me to talk about stop losses, referring to this move in here where if you get a stop here, I mean, that's just going to crush you. See, for me, I don't even believe in stopping unless you made good profit. If you make a lose on a trade because your sell order misses, then you lose. An example of such is maybe you had a sell order here at 31.6, didn't go through. I mean, oh, you could stop here and it would have been good play. No, how about this? Instead of using stop losses, and I'm saying talking this to myself, and I already know this, I'm just regurgitating. Instead of a stop loss, if you do see a technical indicator where there is a high probability where you want to make a play for a price to go lower and it's in something that you already own, well, then just sell there at that time and then put your buy order later and you win your play. But I generally don't even do that because as I see these markets, I'll just accumulate them as it goes lower and then distribute them out as the price increases towards the upside. Now, how did people do pushing stop losses down in here? Okay, so for what you have this big level of support. On what price breaking through this support do you place a stop loss? Did you put a stop loss down at, say, now I could understand if you said, you know what, I stopped it out here at, say, 232, then I bought it back. That's fine. But the way I look at it, especially with all those people that talk about, I'm a hodler. Well, I guess I am too, in the sense, when the price goes down, I just know they're going to revert back in time. But I also know the mathematics of it. If I'm buying, say, the 36 handle and this goes down, if this thing has a nice rally up to 28, do I really want to sell for a loss? No. But if I always buy on dips lower, then no matter what, when there's a mathematical good gain and you see price well above the lows, then it's a guarantee that if you know I'm playing this, and this is what the price looks like at this time, that my last buys are in profit because it's not if I bought down below this level, if I'm playing the code, knowing that I'm playing the code. It's where, when, and how much. Did I have two buy handles? Did I buy once at 217, then again at 133? Did I buy anywhere near the bottom? Because if I had a buy order that missed at, say, around this 10,000 number, then it's safe to say that I probably would have bought somewhere around 13 or 14. And I'm just looking to buy more at 10. And if I bought 13 or 14, then glorious days, of course, come into play. Because when something like this happens and the price goes to 62 handle, that means everything that you bought during the November and early December fall had then been sold for the profit. and now you're buying that all back again. So I've never understood the stop loss game. I don't really want to. It's just, I like my strategy as it is. And that's what's important for traders, is to develop a strategy for yourself that works, that you feel comfortable with. And when you do, this is what I recommend. And of course, like I say, this is what I did, is when people come out with information on the internet, to try to validate them the best they can, to make it understand within my monkey brain, and to make their ideas my own. Because one of my great theories on life is you take something like a computer, an automobile, something that a great inventor creates, and then it gets distributed to the world that the masses love. And then all the other creative minds see it. And they take those ideas and they think of something that can make it better. An idea that within their thinking and theology, and do this, this, and this, and it's going to be better. And it is better. And they put that on the market. And then other people see what they did and they're like, oh man, that was cool. But if they did this, and that's how things always get continuously better, as we also understand technologies through at times more and more. Have yourself a great day. Bye-bye.